Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Chinyi. Good evening. Today is Wednesday, September 3rd. I'm analyst Jiang Jida. During class, please remember to like, subscribe, and share. If you have investment questions, leave a comment. If I don't have time to answer today, I'll address them one by one in tomorrow's class. Alright, hello everyone. When we went live, students asked about recent volatility in the Taiwan stock market. It has fluctuated since early September. At the start of September, we reminded everyone that, based on past history, September has been a volatile month for Taiwan stocks, US stocks, or international markets. Volatility is naturally higher, and the chances of a decline are also greater, so you need to manage your positions accordingly. After all, the market goes up and down, and although there's still an invisible big hand supporting the market, don't forget that next year, the US will also be facing the so-called midterm elections. During midterm elections, it's actually the same for stock markets around the world. Whenever there's an election, it's inevitable that some major players in the market will actively step in to prop up the market. So even though there's a chance of a downturn in September, during the decline, you can still look forward to seeing whether this invisible big hand will step in to support the market. But even with that support, I still want to remind everyone to pay attention to your position management. Alright, good night, everyone. Shout out to Huijuan Shi, Shi, Soen Li, Soen, and Xiamaelv, Fai Diu, and Ming, good evening. Good evening to our staff as well. Good evening, good evening. Okay, finally, some of you managed to catch the live stream today. That's alright, whether you have time to join the live or not. Remember, if you missed the class, make sure to catch up later. When watching replays, adjust playback speed as needed. If anything is unclear, comment anytime. For unanswered questions, we'll cover them in class tomorrow. Now, let's review today's investment highlights. First, reasons for the downturn. China and Russia teaming up, and the US is furious. Looking for reasons for the downturn. This has also been the case in the past couple of days. As we know, starting from September, whether it was last Friday, the first trading day after Labor Day yesterday, or today, the US stock market has been experiencing significant volatility. Yesterday, we saw a notable pullback and correction during intraday trading in the US market, but then there was a sharp rally toward the close. So, it's pretty clear that there's always a big player in the market propping things up. So what exactly is causing this downturn? Of course, there are a lot of different opinions in the market. Some say it's due to uncertainties around the trade war, and then Trump came out to clarify things, because he's worried that if the US stock market drops, it could affect his poll numbers or even next year's election campaign. It could have a significant impact. On the other hand, there's also a school of thought that points to fiscal issues in Europe, like in the UK and France, or things like votes of no confidence, all of which are affecting the situation. But are these really the main reasons behind the drop in international stock markets, even the US market? Today, we'll be discussing related topics. In addition, when it comes to energy risks, China is actively trying to build closer ties with many countries, whether it's India, Southeast Asian nations, or even now, including Russia. So, what about China and Russia? Today, they announced some cooperative plans regarding natural gas. These natural gas agreements, of course, will bring significant benefits to China in terms of securing natural gas supplies. This kind of partnership has also sparked outrage from the United States. So, how should we view the ongoing geopolitical risks? As for the industrial sector, a single ruling saved 2 companies. This ruling is, of course, a huge piece of news. Today, it was announced that regarding Google, the US court had previously found it in violation of some antitrust laws. Prosecutors were demanding that Google be broken up, whether that meant splitting up its browser or its Android system, to prevent it from having a monopoly. But today, the court ruled against this request, meaning that Google does not need to be broken up. And of course, this news gave a boost to the US stock market. We saw Google stock surge in pre-market trading in the US. And what about the other company? It's related to Google. Specifically, what important information does this ruling mention, and will it have any real impact on Google's or even Apple's stock price, revenue, profits, or future development? Or is it just a piece of good news in the headlines? Today, we'll also update you on another topic everyone cares about, TSMC. Our Taiwan's pride, TSMC, announced today that, for example, its Nanjing plant in China has received a request from the US government. Originally, there were some exemptions, meaning, for example, using American technology or equipment, certain import and export activities weren't regulated and were exempted. This applied to companies like Samsung and SK Hynix in South Korea as well. But now, the US government is going back on its word again. Now they're saying that from now until the end of this year, whether it's TSMC, Samsung, or SK Hynix, any of these companies, as long as you have factories in China, including things like equipment shipments or using American technology, you'll have to apply for export permits for everything, case by case, step by step. So, is this news really the main reason why TSMC's stock is dropping? People are especially paying attention to whether this will affect TSMC's fundamental revenue and profits in the future. Today, I want to chat with everyone about this topic. Hi everyone, good evening. Good evening to Hong Gong Ting, and also to Melissa Chan. Saint Lee, good evening. Hope you're having fun. Let me look, does Fuqiao have a chance? Some teachers analyzed it, right? Is it about Japan? Japan, okay. As for Fuqiao, I don't have any positions in Taiwan stocks, because in our group, we mainly focus on US stocks. Simply, Fuqiao is related to fiberglass cloth, right? Like Taibua, Fuqiao, Dehong. What did I just say again? Let's talk about Taiwan's stock market. Taiwan's stock market, driven by the AI trend, has seen many individual stocks rising with the tide. It's been wave after wave. Starting last year and the year before, it began with servers, then cooling systems like Aures and Chicony Power. This year, well-known power supply companies like Delta Electronics and Lite-On emerged. More recently, especially this quarter, the stocks that have gone up most have shifted toward PCBs. For high-end printed circuit boards, like HDA, companies like Unimicron, Nanya PCB, and Kinsus have all been going up. The rise in printed circuit board stocks has been wild. Any company, large cap or small cap, like Compec, Unitech, Gold Circuit Electronics, Chinpoon, or Yaohua, has been climbing. As printed circuit boards go up, resin producers like Nanya Plastics are seeing gains. Companies directly involved in making materials for printed circuit boards, like those producing resin, have also become a focus, especially among plastic-related stocks such as Nanya. And then, as we just mentioned, major fiberglass manufacturers like Taiwan Glass, Fuqiao, and Taihong are also connected to the printed circuit board industry. So, it's really a case of sector rotation happening continuously within these related industries. And with this kind of sector rotation, you can only keep increasing your positions or keep trading according to the ongoing trend. However, there is a risk involved. These kinds of stocks, they don't necessarily have fundamentally strong financials, not always. Sometimes, the fundamentals aren't even solid yet, maybe they haven't even secured any orders. It could just be a concept, like an AI-related theme, and then all the related upstream and downstream suppliers, materials, and equipment all get a share of the action. It just depends on which sector is rotating at the moment. So, when you're trading these so-called theme stocks, concept stocks, or hot stocks, remember not to go all in with your position. And then, try to take profits when you have them. Buy low, sell high, buy low, sell high. As soon as the price accidentally falls below the 5-day or 10-day moving average, remember to get out quickly. That's a safer approach. As for their fundamentals, we probably don't have time to go through each one in detail today. It's just that a student happened to ask about this. Good evening to Hiwu Buji, who asked about related stocks like Dehong, Fuqiao, or similar ones. So, just keep an eye on them. You need to look at the fundamentals, financials, and deposit situation. But due to time constraints, let's keep our focus on the US stock market for now. In the future, if we have time during seminars about the Taiwan stock market and we cover related topics, I'll share more with everyone then. Alright, so as for the investment focus I just mentioned, I'd also like to give a quick review of the data. This afternoon, the Eurozone's August Services PMI final reading was released. The previous value was 50.7, the forecast was 50.7, and the actual figure came in slightly lower at 50.5. The impact isn't significant, at least it's still above 50. Overall, looking at the Eurozone, whether it's manufacturing or services, the related PMI numbers, they all remain above 50, and remember, when the PMI is above 50, it indicates that the economy is leaning toward expansion. Below 50 means it's leaning toward contraction. So, for the Eurozone, things are generally on the expansion side, and there aren't any major issues. As for the US, the focus is also mainly on the services-related PMI data. It will outperform the manufacturing-related PMI, because as we've said, the service sector's operations or its overall share is still much larger in the US. The the service industry still makes up a bigger portion than manufacturing. So, when looking at the US, this is what we focus on. As for the related PMI data, usually the services PMI is just a bit more important than the manufacturing PMI. Just wanted to add that for everyone. Also, tonight at 10 o'clock, okay, good night, Google. And, good evening as well. Alright, you're welcome. And for Lily CH in the evening, you're welcome too. Okay, so at 10 p.m. tonight, keep an eye on the US July JOLTS job openings. The previous figure was 7.437 million job openings. The expectation is that it will slightly decrease to 7.378 million, so the drop isn't big, but it is trending downward, which means the overall job market is still leaning toward easing and slowing down. As the job market slows, it's okay for it to ease, but we don't want a sharp decline. For example, if it goes from 7.43 million to 7.38 million today, and continues to decrease gradually like this, that's acceptable. A gradual and controlled decline is still within an acceptable range. You don't want a situation where last month there were 7.43 million job openings, because the more job vacancies there are, the more it means demand is outstripping supply in the market. That shows companies need a lot of positions filled, but there aren't as many people looking for jobs, so it means there are still plenty of opportunities and the market is still pretty active. But if the number of job openings keeps dropping, getting lower and lower, what does that mean? It means companies aren't looking to expand their business or hire as many people. That's why the number of job openings would decrease. So when you look at this number, a gradual decline just means the job market is cooling off, but it doesn't necessarily mean we're heading into a recession. While things are cooling down, the Federal Reserve might also be more willing to consider lowering interest rates. To stimulate the economy, boost the business climate, and encourage corporate investment or the job market, lowering interest rates is the way to go. But if the employment data, for example, drops suddenly from 7.43 million to 7 million in a single month, then that's not a good sign. It would indicate not just a slowdown, but actually a warning of recession. So, a slight decrease is okay, but you don't want to see a sharp drop. A lot of recent data, whether it's PMI non-farm payrolls, or this week's non-farm and ADP reports, everyone is watching these numbers. Remember, a gradual decline is acceptable, or even staying in line with last month's figures. If the numbers meet expectations or are roughly in line with last month's data, then there's not much of a problem. But if there's a sharp drop, you need to pause and pay attention. Just a reminder for everyone, this is the way recent data trends are moving. Also, the month-on-month factory orders for July will be released at 10 p.m. The previous value was minus 4.8%, and the forecast is minus 1.4%. So for these kinds of volatile data, just use them as a rough reference. Because, before and after the trade war started, a lot of manufacturers might have seen their factory orders suddenly surge or suddenly drop. So this is the month-on-month part. Month-on-month means comparing this month to last month, while year-on-year means comparing this month's data to the same month last year. And because this is month-on-month, it means you might see the data fluctuate a lot. Sometimes it's positive growth, sometimes it's negative, sometimes it's normal. For example, in May it spiked to 8.3%, and then last month it dropped to 4.8%. I think it's basically comparing to the previous month, so if last month's factory orders were really, really good, so if this month's performance isn't as good, then the month-on-month rate will turn negative. And if last month's data wasn't good, then as long as there's a little bit of growth this month, the month-on-month rate will turn positive. That's why the recent data has been fluctuating quite a lot, up and down very noticeably. Of course, this is directly impacted by the proportion of tariffs, so I'd say it's best to view it neutrally. If there are big swings up or down, don't overinterpret it, especially given the current market conditions. You'll notice that for this factory, the order month-on-month rate can fluctuate a lot, with really big swings. Maybe by the fourth quarter, the data will start to stabilize a bit, but for these past few months, April, May, June, July, the numbers have been quite volatile. So, keep an eye on the factory order month-on-month rate at 10 p.m. tonight. Alright, Anna, good night, good night. Okay, so next, let's take a look at the perspectives of officials and investors. Starting from September, well, September has passed, and whether you look at 5, 10, or even 35 years of historical data, September really does tend to see declines. Since there's this so-called September curse, where September is prone to drops, after the dip in September, there's still a chance to look forward to the fourth quarter. Maybe there's an opportunity for a rally during the traditional peak season. The traditional bull season for the stock market, the fourth quarter, is still something to look forward to. Of course, I still want to remind everyone, in September, you should first avoid the short-term pullbacks or declines. Adjust your positions a bit, maybe keep your holdings at around 50% to 70%, but don't go all in. So in the upcoming fourth quarter, including the Christmas season and things like, the holidays, whether it's the end of October, what's that holiday called again? Is it Easter or Thanksgiving? I forget, not sure if it's Easter or Thanksgiving, and then after that it's Christmas, and then there's also Black Friday. A lot of peak seasons related to retail will drive manufacturers' shipments, orders, and the overall economy. That's why the fourth quarter is often when many companies in the stock market make a lot of money, and it's a key time when the stock market often hits new highs. Seasonal factors are at play here, so the September decline sets the stage for a possible Q4 rise, creating a buying opportunity after the drop. This isn't necessarily bad. In September, everyone should pay more attention and be more cautious. Regarding Sandra Thompson, head of the U.S. Federal Housing Finance Agency, she mentioned this is related to Cook. He meant that Cook claimed a property as his primary residence, saying he was going to live there himself, but then ended up renting it out to someone else. So, he thinks that what Cook did, saying he was going to live there but then renting it out, is really not right, and, well, that's just not okay. Actually, this kind of thing happens a lot in Taiwan too. In Taiwan, you often see a lot of, how should I put it? A lot of people, when they buy their first house, it's really for their own use, right? But maybe for the second house, you might want to get a better mortgage rate, so you might still register it as owner-occupied, or use a family member's name as a proxy to register it. There are even things like the so-called housing list plan, or as long as your family member doesn't own a house yet, as long as it's their first one, you use their name to register. But in reality, what are you doing? You're probably doing it for investment purposes. You might be doing it to rent the place out to someone else, but maybe you didn't declare it. If you don't get caught, nothing happens. But if you do get caught, you might get fined, have to pay back taxes, or make up for unpaid taxes, and so on. So actually, I think a lot of people around the world do this kind of thing. For his first and second properties, he might tell everyone, or declare to the authorities, that he's going to live there himself, but in reality, he's renting them out and collecting rent. So why did Cook get targeted this time? Of course, a big reason is that Trump really wants to replace him. He wants to replace everyone at the Federal Reserve with his own people, because having his own team in place makes things more convenient for him. When it comes to implementing monetary policy, he can push more aggressively for interest rate cuts. Trump really wants the Fed to cut rates quickly, because he thinks Powell's pace of rate cuts is just way too slow. That's why he's been eager to replace people with his own picks. For example, replacing Kugler with Milan, and as for Powell, Trump hopes that after Powell steps down in May next year, he can immediately appoint his preferred choice as the new Fed chair. Now, he's turning his attention to Fed Governor Cook. Of course, Cook doesn't want to step down. Anyway, just so everyone's aware, this is what's going on. How long will this whole thing drag on? I think it'll keep going for a while, probably throughout this year, until either Cook is actually willing to resign, or a court ruling determines that Cook has violated ethics, integrity, or moral principles, and then she might have to step down. So, maybe at that point, only then will this matter finally be settled. Otherwise, I don't think the lawsuit will end that quickly. Just something to keep in mind. Also, yesterday and even last week, we've seen the US stock market starting to show some volatility at high levels, with repeated ups and downs. For example, the Philadelphia Semiconductor Index has seen some significant drops. There are a few reasons for this. Of course, today, Trump made a statement. Trump said, "So, about the tariff issue, wasn't it just last week that the US Federal Appeals Court said that Trump's tariff case exceeded his authority and ruled it invalid? But after October 14th, it's been decided that some things will have to be put on hold. But they're also allowing Trump to take some appeal actions." Trump said that, at the earliest, as soon as today, Wednesday at the latest, he'll appeal to the Supreme Court. If the tariff ruling goes against him, the US might have to refund billions of dollars in tariffs, and he believes that the recent drop in the stock market over the past couple of days is related to this. He says the reason is that the Federal Appeals Court ruled against the tariff case, so he's shifting the blame onto the Federal Appeals Court, onto the federal courts. He believes today's market drop is because the market wants tariffs, the market wants to use tariffs to boost US fiscal revenue. But with the federal court making this kind of ruling, everyone's worried there won't be money in the US stock market. There could be a crisis in US finances, so he's passing the buck to them, blaming them for it. After shifting the blame, of course, Trump did say that he still has what he calls a Plan B, so there's a Plan A and a Plan B. He said that at least there are still 5 related laws. It's possible to impose tariffs, it's just that the procedures or the time required are a bit lengthy, just more drawn out, but not impossible. For example, There are things like Section 232, Section 301 trade regulations, and many other things. So, using IEEPA or declaring a national emergency to impose tariffs on the whole world, even though the federal court ruled that this was invalid and might exceed the president's authority, he believes that there are actually 5 other laws that can be used to continue imposing tariffs through legal means. So, strictly speaking, we believe that tariffs, whether they are imposed or not, are not the real cause. As for the reason behind the decline in the US stock market, besides the seasonal tendency for a drop in September that we just mentioned, if you talk about tariffs, the federal court appeal, logically, if they appeal and say these tariffs shouldn't be imposed, then not imposing them should be good for the stock market, right? It should lower business costs. So why does the stock market still fall? This shows that this particular action is no longer the reason affecting whether the market goes up or down. Do you understand? Because this whole tariff issue, ever since Trump announced global tariffs on April 2nd, it's already been a full 4 months. From the initial 5% or 61 different tariffs up until now, some have even been cut in half. Some started at 10%, then 20%, and gradually, some countries have 10%, some have 50%, like India, which is at 50%. The EU, Japan, and South Korea might be at 15%. So this whole tariff action has basically become an accepted fact around the world. Once the whole world recognizes it as a fact, companies and manufacturers from different countries have already started making adjustments and preparations, and many of them actually began getting ready as early as April. So now, as things have developed into August and September, if suddenly the Federal Appeals Court says, hey, maybe we don't need to impose tariffs, and then after October, there's no need for tariffs, what do you think that means for these companies? Does it really help these companies, businesses, or even the countries that much? Not necessarily. Why? Because after October, this ruling could become invalid again. So these countries and companies still have to keep negotiating with the US and with Trump, because there are still a lot of uncertainties after mid-October. So the reason the stock market drops isn't because the court says it will or won't make a ruling. Whether the ruling is valid or not is no longer the main point, because the whole world was already prepared for this. What everyone is worried about now is this so-called market uncertainty. We've talked about this before, whether it's the Taiwan stock market or the US stock market. The market isn't afraid of bad news. And it doesn't necessarily look at good news with a lot of optimism either. When there's good news, the market reacts right away and stocks go up, but after that, the rise might only last a day or two, and sometimes it even opens high and closes low. When bad news comes out, the market reacts and that's it, because everyone figures that the bad news is already settled, it's a done deal. So whether it's good news or bad news, the market will react to it. Once the market has reacted, good news might get a reaction for 3 or 4 days, bad news for 3 days, and once that's done, it's okay. What the market worries about most isn't whether the news is good or bad. The market is most worried about uncertainty, because uncertainty makes people unsure. Should I keep holding my stocks, buying, or what? Should I reduce my position, or just watching? We still have to see how the court rules on Trump in mid-October, or whether China will negotiate with the US, or if Europe, India, Japan, or South Korea back out and say they don't want to talk. So what the market worries about are these uncertain, unpredictable factors. These kinds of unpredictable factors are really annoying, because you can never be sure which direction things will go. That's why the market, the stock market, or prices, all of them, face their biggest uncertainties, and that's often what causes the stock market to swing so wildly. It's because of things like this. So why do we say that starting in September, the volatility suddenly becomes so intense? It's because the proportion of uncertainty factors becomes much larger. But once things gradually settle down and the dust clears, even if it's bad news, I think it's already been priced in. And if it's good news, there's no need to overthink it either, because I'll let everyone know anyway. Good news doesn't mean that after mid-October there won't be any renegotiations. No, because over the past 4 or 5 months, many countries have been negotiating. It's impossible to scrap everything and start over. That would be a waste of time worldwide. As for a negative factor, there's a bearish argument. What is it? He was talking about Europe, about the sublessors there. He said, maybe some negative factors, some bearishness, might be because the European market caused the drop. Basically, whenever there's a drop or decline, people look for reasons and explanations. These reasons have always existed before, they've always been there, but when the stock market wasn't falling, no one would bring them up. But when the market does go down, these old reasons get brought up for discussion. People say, hey, could it be because of something someone said 2 days ago or a week ago? So now, when the market drops, people just look for reasons to explain the drop, but these aren't actually the main factors or real momentum behind the decline. Take what's happening in Europe, for example. The French Prime Minister is facing a confidence vote next week because the opposition is against his plan to cut government spending. So, he might face a no-confidence vote, and there's a chance he could be ousted or have to step down. But actually, this isn't something that just happened yesterday. It didn't happen the day before yesterday either. The news about the no-confidence vote coming up next week was already known in mid-August, so it's information from half a month ago. Basically, they're just reheating old news. In addition, the UK Chancellor of the Exchequer is expected to introduce tax increases in the autumn budget to meet fiscal targets. Oh, so everyone is worried about whether the UK's finances are in trouble, but this isn't something that just happened today either. These issues have been discussed continuously for a while now, which has led to an increase in the yield on long-term UK government bonds, because people are concerned that there might be fiscal problems. There's a heavy burden, they might need to raise taxes, increase the budget, issue more debt, and so on. This caused bond yields to spike, reaching the highest level since 1998, because of concerns over the UK's fiscal situation. These fiscal worries dragged down UK stocks and bonds, with major markets falling. This decline in stocks and bonds isn't in the UK, but also in France. Naturally, the US is affected too. It's hard to resist the trend. So, when Europe is falling, what does the US do? The US market has already gone up a lot and hit new highs, so when Europe drops, the US. Since all the European countries are dropping, the US just goes along with it and pulls back after its big gains. So, you might ask whether these are really the main reasons. I think, honestly, they're not the main factors causing this. I really don't think they're the main reasons. It's just that when the market drops, people always want to find some reason to justify it, to explain why it's going down. I just want to remind everyone, when you're reading these news stories, since we've been tracking this all along, looking at the news every day, you'll realize that things like the French Prime Minister's confidence vote or the UK's fiscal issues, these aren't things that just happened today. None of this just happened today, okay? Alright, so the uncertainty factors, I think uncertainty is the biggest reason for the drop. Plus, there are seasonal adjustments in September, collective accounting, and other reasons. So, the decline in September also has lagging causes. As for whether the drop because of what's happening in Europe, in my opinion, honestly, that's a stretch. It really is a stretch. But of course, we still want to provide you with all the news and information. Shout out to SY Lu, Miss Cher, good evening, and good evening to Fan Hua as well. Regarding the 10-year government bond, yesterday it edged up slightly to 4.28. The terminal rate hasn't really changed, it's still holding at 3.77. Even though we can see that in the UK, France, and Germany, the 10-year government bond yield suddenly went up, but if you all take a look, let me put it this way, if you look back over the past month at the trend of the 10-year government bond yields for France, Germany, and the UK, it's not like they only started rising yesterday. No, right? It's been slowly rising. Maybe a sudden spike broke past the previous high, worrying everyone. Okay, so what about the market's expectations for the pace of rate cuts over the next 10 years? It's still holding at about 2.2 times. There hasn't been any adjustment just because of the stock market pullback or volatility in the European stock markets. The expected number of rate cuts hasn't changed. I think the most important thing everyone should pay attention to, the biggest factor that could change the number of rate cuts or cause significant fluctuations in the 10-year Treasury yield, is not the European stock market. The time when there could be a bigger impact is actually this Friday, when the non-farm payroll numbers are released. The release of the US unemployment rate will also have a major impact on whether monetary policy will lean more dovish or hawkish. Then, moving on to next week, on September 10th and 11th, the latest US PPI and CPI data will be announced. This is also related to inflation. In the 2 weeks leading up to the FOMC meeting on September 18th, you need to pay attention to non-farm payroll numbers, the job market, and inflation, as they are all closely connected. The US dollar index remains unchanged, down 0.1%, and continues to fluctuate above the 50-day moving average. Regarding geopolitical risks, simply put, things like the Russian Prime Minister saying they will continue diplomatic consultations with the US Department of State. Personally, I think this kind of news, it's not going to escalate that quickly, and as for Russia, Ukraine, and the US, honestly, there's still room for these three parties to keep negotiating. As for what the Russian foreign minister said, that Russia and Ukraine will continue negotiations and put forward conditions, honestly, you don't really need to pay special attention to these. The truth is, these conditions are pretty much the same as what they've been saying over the past few months, or even years. He opposes Ukraine joining NATO, insists that Ukraine must remain neutral, cannot have nuclear weapons, and cannot form alliances with other countries. But think about it, is that even possible? Ukraine wants to join NATO, wants to join the EU, and wants support from other countries. So how could it possibly stay neutral? It's impossible, so there's really no point in negotiating. That's why the leaders of Russia and Ukraine haven't met, and things are at a standstill. That makes sense, right? Now, this news, let's see. What natural gas industry does Russia have? They've decided to cooperate with China's natural gas pipeline group. They're launching a new natural gas project called the Power of Siberia 2, Power 2, or Power Number 2. So, what is this Power of Siberia 2 pipeline for? Of course, it's to transport natural gas. And who is it being transported to? To China. Over the next 30 years, they're going to deliver 50 billion cubic meters of natural gas to China every year. And of course, China can get it at a very low price, even lower than what Europe is offered, so they get an even better deal. So basically, that's what it is. Russia is trying to win over China, hoping China will support it. The partnership between China and Russia is about one thing, joining forces to push back against the situation in Ukraine and the United States. That's what they're doing, resisting together. As for the Power of Siberia 2 pipeline, where does it run? It sometimes goes through Mongolia, starting in Russia, passing through Mongolia, and then delivered to China. That's the route it takes. It's kind of similar to what we talked about a long time ago. Russia has two natural gas pipelines, one called Nord Stream 1 and the other called Nord Stream 2. Not Northwest Stream or anything like that, but Nord as in north and Stream as in a creek or river. So, Nord Stream 1 and Nord Stream 2. These two pipelines run directly from Russia, all the way under the sea, straight to Germany. There are two lines, and they're almost parallel, Nord Stream 1 and Nord Stream 2, both transporting natural gas. Later on, due to some US sanctions or pressure from the United States, Germany eventually said, we're going to stop using them, we won't continue anymore. They decided not to use Russian natural gas anymore, hoping that in the future, Europe won't have to rely on Russian gas. But in the short term, is it really possible to completely stop using Russian natural gas? It's very difficult, almost impossible. Even if the pipelines aren't running, there are still many LNG ships transporting gas by sea. That's why I keep telling everyone about the EU. They say they want to sanction Russia, but they can't really do it. They still constantly need Russian crude oil and natural gas, especially natural gas. European winters are very cold, and they use natural gas for heating and other equipment. They rely on Russia's low-priced natural gas. Sanctions are one thing, but have they really sanctioned natural gas? They've never dared to sanction natural gas. Why? Because Europe needs it. As for Russia's cooperation with China, that's something we'll talk more about with everyone in the future. The Power of Siberia 2 pipeline, what exactly is going on with that? We'll discuss it with you all later. When it comes to geopolitical risks, countries like China and Russia are continuing to work together. As for crude oil prices, there hasn't been much change, they're still fluctuating around $65. Now, regarding economic data, let's quickly take a look. The more important economic data, I think, is actually coming tomorrow. Early tomorrow morning, the Federal Reserve will release its economic outlook. We'll also keep track of what is said in tomorrow's meeting and share the details with everyone. It's very important, because typically, the Beige Book, well, basically, it always publishes information from the main Federal Reserve districts. I think there are about 12 main Fed districts, right? It covers things like their economic development, the job market, business investments, and also factors like inflation, as well as consumer spending and household expenditures. All of this is included in the Beige Book. If the Beige Book reports results that are better than expected, or performs well. So what does that mean? It means the economy is still doing well, right? And if the economy is doing well, is there any need to rush into rate cuts? No, there isn't. So the content of the Beige Book actually plays a certain role. When the Fed makes its interest rate decision on September 18th, the Beige Book will serve as a reference. You can think of it as a kind of white paper or policy paper to look at this issue. So tomorrow, I'll follow up with everyone on what the Beige Book actually says. Alright, as for the earnings reports, I think it's enough if we just look at Broadcom's earnings on Wednesday, September 5th. Now, when it comes to industry news, this is really important. Google. So, Google, after 5 years of litigation, this lawsuit has dragged on for a long time, 5 years. It's about antitrust. The prosecutors want to educate the public and break things up. They want to separate Google's browser, split it off, and even break up the Android system. If this actually succeeds, the impact on Google would be absolutely huge, because Google is a massive cash cow. Most smartphones use the Android system, otherwise, they're running Apple's iOS. It's really just these two major players. So if you force Google to spin off its two biggest cash cows, one male, one female, so to speak, If you take both the golden hen and the rooster away, for Google, it's like cutting off their arms and legs, like losing their martial arts skills. So that's Google's browser and Google's Android system. They can't split them up, because breaking up the company would put a lot of pressure on them. They wouldn't be able to make money anymore, since everything would be separated, and their advantage of dominating the entire market would be lost. Fortunately, after 5 years of litigation, the American judge, this Washington judge, ruled that Google did not constitute a monopoly in online search. He said Google does not have a monopoly on online search, and he also rejected the prosecutor's request to force the sale of the browser and the Android system. He also said that Google can continue to pay Apple and other partners fees to be the default search engine. What does it mean to be the default search engine? Oh, simply put, it's like on Apple's phones. Whether it's an Apple phone or any Android phone, no matter which company makes the phone, Huawei, Xiaomi, or whatever, it doesn't matter. On their phones, there might be a browser app. For example, on Apple, when you open the browser app and tap on it, it'll ask you which one you want to use. The search engine is used as the main tool for searching web pages. Usually, Apple sets Google as the default search engine right away. Now, you might ask, is it free for Google to be chosen like this? Of course not. Google has to pay these manufacturers, pay these phone companies, and only then will the phone companies set it so that when users tap on the search engine, Google is the one that comes up. The first one you see and the first one you select is Google. So, what's the benefit of that? Of course, when you enter through Google's portal, whether you want to advertise, look for information, or arrange the order of products, Google has more room to manipulate things. What do I mean by more room to manipulate? Let me give you an example. If you're already using Google, you just use Google, right? Say you're looking for a restaurant. For example, I want to find a Thai restaurant, or maybe a French restaurant. So on Google, you type in, say, French restaurant Taipei. Which French restaurants are there in Taipei? At this point, you'll notice that when the results come up, you might wonder, why is a certain restaurant listed first, another one second, and maybe a third one after that? Why is that? How is this order determined? How does this order come about? Of course, it's because a lot of people are using Google's search engine and constantly searching for these businesses. So, if a store is more popular, it gets placed at the top. But if it's not just users or consumers searching and the algorithm naturally ranking them at the top, then how do these businesses become number 1 or number 2? How do businesses maneuver to get the top spots and more exposure? By placing ads, by giving ads to Google. Then Google will push their rankings higher. Okay. So why is this portal website so incredibly important? Because it's the biggest source for Google to place and run ads. That's why it has to lock in a lot of consumers, bind itself to many smartphones, and collaborate with them. This way, when users open their browsers on these phones, the default choice is Google, not Yahoo, not Meetup, not Sina, not Alibaba, not Baidu. The first thing they pick is Google. That's why this setup allows Google's ad revenue to increase significantly. So why does Google have to pay Apple $20 billion every year? It's for this, the default search engine fee. That's the reason. So every year, Apple gets $20 billion in revenue from Google for this. $20 billion. That's about 600 billion new Taiwan dollars. That's a huge amount, and just from this alone, they can make so much money. Of course, the courts have also ruled on related matters, like requiring competitors to share, opening up competition, and many other things. But still, as I keep telling everyone, as long as Google's 2 major cash cows aren't broken up, it's a huge advantage for Google. So, in US pre-market trading today, Google is still seeing a strong rally. And as for Google, regardless of whether there's any positive news, its stock price is actually one of the strongest among the Magnificent Seven. It's relatively stable, the trend has been steady, staying above the 20-day moving average. Even though it dipped slightly by 0.73% yesterday, today in pre-market trading it looks like it's up 5% to 6%. It should continue to push higher. So, for those of you holding Google stock, just remember that as long as it doesn't fall below the 20-day moving average, there's no need to worry too much. That's a little extra info for everyone regarding Google. Alright, now moving on, what about Apple? Apple, of course, won't be affected by Google's split, and it can get $20 billion a year from this, which is obviously great revenue. But Apple has a lot more issues. Its bigger problem is really with its AI development. Because just today, it was reported that the head of Apple's robotics AI research, his name is Jian Zhang, and he's probably Chinese, this AI research chief, Jian Zhang, has left for Meta. He's switched over to Meta. Meta has been poaching a lot of people lately, taking talent from Apple, from OpenAI, and from Google's Gemini team. Lots of people have been recruited over there. So Meta is making some moves to integrate things. As for Apple, this executive was poached, and even 3 AI researchers have all left Apple's large language model team. So I think Apple's problem isn't that their phones aren't good, their phones are actually great. Their shipments and revenue are all growing, we're talking about tens of billions, even hundreds of billions of dollars. Every quarter, they're making $40 or $50 billion, which is extremely high and really impressive. Apple's bigger problem is that so many other companies, whether they're smartphone makers, AI platform companies, or even ones like Microsoft, Google, OpenAI, Amazon, or Meta, are all developing AI. Even Chinese companies like Huawei, or companies like DeepMind and Alibaba, are all making a huge push in AI development. But despite Apple having so many resources, so much talent, and so much money, it's the only one that seems to be lagging behind. But when it comes to AI, Apple has just been unable to keep up with everyone else's pace, and that's a really big weakness for Apple. This is where its weakness lies. So, what about its strengths? Its strengths are in hardware, in innovation, and in the visual appeal of Apple phones. Plus, Apple fans are extremely loyal. But its weakness is that it's always lagged behind in AI. And besides falling behind in AI, a lot of its AI talent has also been leaving for other companies. If you think back, do you remember, several years ago? Apple also once tried to develop something, just like many other companies were developing something. Electric vehicles, German manufacturers, Japanese manufacturers were all very proactive in making electric cars, right? If you think back, it was just 2 or 3 years ago. Because Tesla's electric cars were selling like crazy, the Model 3, Model Y, and whatever other models, they were selling a ton. And then, electric charging stations were being installed all over the world, in huge numbers. There was also the debate about whether to use Tesla's charging standard or the national charging standard. Wasn't there a lot of controversy back then? In the end, Tesla made a surprise move and basically monopolized everything, right? At that point, when Tesla had completely dominated the electric vehicle charging station market, all the international manufacturers started switching over to Tesla's standard. Everyone probably remembers this very clearly. BMW, Mercedes, Toyota, all of them started adopting Tesla's standard. Back then, about 2 years ago, electric vehicles were all the rage, right? At that time, Tesla's stock price also skyrocketed. It went through the roof. But during that period, Apple just couldn't keep up. They wanted to get into electric vehicles too. What stands out the most is that Apple originally wanted to develop electric cars, but things just didn't go well, whether it was talent or hardware. They kept working on it quietly, but nothing really took off. But after working on it for several years, nothing ever came out of it. In the end, Apple completely shut down its electric vehicle division. I remember they lost several $1 billion when they laid everyone off. After that, Apple never touched electric vehicles again. They just stopped getting involved. So, looking at this development history, I feel like something similar is happening now in the field of AI. Apple seems to be going down a similar path. They really want to develop this, because everyone else is working on it. All manufacturers, all companies, every country is making a big push for AI. But Apple is the only one that can't come up with a decent AI product. They can't make it work. Even though they're collaborating with OpenAI, they still can't get anything out. They can't make progress. So, who knows, maybe one day they'll realize they can't do AI and decide to give up on it. Or maybe, they'll just go ahead and buy someone else's AI and use it directly, instead of developing their own. That's possible too. If they decide not to develop their own, that would mean shutting down all their AI departments, just laying off everyone in their AI divisions. Then, to use AI, they just partner with others for everything. Of course, there are downsides to this. You're completely at the mercy of others, because your own technology just isn't up to par. Even if you have enough resources and plenty of money, you still can't develop that technology yourself. So what can you do? You end up having to partner with companies like Google. You have to work with Amazon, with Meta, even with OpenAI. You can only rely on these kinds of partnerships. So right now, it feels like Apple's development in AI is a bit like when they tried to get into electric cars. They just can't seem to make it happen. I think this is by far their biggest weakness. As for how this is reflected in the stock price, even though it has broken out of the downward trend line, it's still at a high level and currently fluctuating. But the good thing is, from a technical perspective, it has already broken out of the downward trend. A breakout is a good sign. Next, we watch whether it can hold above the 20-day moving average or the 200-day moving average. If it can stay above those levels. With this positive news from Google, let's see if it can help support the price. If it can hold and doesn't fall back below the 20-day or 200-day moving averages, then Apple still has a chance to catch up and make up for previous losses. There's still an opportunity for a rebound. After all, among the Magnificent Seven, it's Google, Apple, and Tesla that are relatively weaker. Apple and Tesla's performance is still on the weaker side. Whether they can catch up in the future and help support the index and the US stock market a bit, Apple is really important in this regard. Because Apple holds such a large weight in the index, it's a major tool for propping up the entire market, kind of like how TSMC is for Taiwan. So if Apple can hold its ground, then basically the US stock market as a whole shouldn't perform too badly. So keep an eye on Apple. It's just that. Aside from being relatively weak in AI development, everyone should still pay some attention. In September, I think it's September 10th, Apple is supposed to be releasing the new iPhone 17. So keep an eye on this new phone and see if its AI features can show some promise this time. If the iPhone 17 has some standout new features, maybe it will help boost Apple's shipments, or at least attract more people who haven't bought Apple products yet. So I think this is something we should pay a bit of attention to. On September 10th, when Apple holds its launch event, we'll track it together with everyone. But the main thing to watch going forward is Apple's AI development. If their AI progress remains weak, I don't think that's a good sign for their stock price in the long run. Of course, for tonight, we can still look forward to a possible rise. There's still hope for an upward move, because Google's push, has actually helped Apple. Finally, let me mention TSMC. Wow, it's already 8:40 as I talk. Whenever I start talking, I end up covering a lot of things. Speaking of which, has anyone checked out our group's English-related website? Lately, we've been using some AI tools to translate our online programs into English, making them international. Some students have asked me, "Teacher, how is your English so good? How do you speak so clearly, even clearer than some anchors from Singapore or the US?" But no, that's not me speaking. My English isn't that good. As for my English, I can handle some very basic conversations, maybe just a little bit more than that. But to speak as well as those anchors? Definitely not me. So, all of that is done through AI. We use some AI tools to do the conversion. That way, all of our content in Chinese can be translated. When it gets translated into English, I think it's really impressive. The AI-generated commentary even matches the mouth movements. If you look closely, even the way our mouths move when we speak, and the intonation, it can sync with that. The fact that it can match the intonation of English is just amazing. I'm really impressed that the mouth shapes can actually mimic English pronunciation. But actually, I was speaking Chinese. Yet after it was processed by AI, even the mouth movements, the facial expressions, and the intonation, all of it became English either with a British or American accent. AI really is everywhere. So everyone should be a bit cautious when using AI-related products. Since our videos can be converted to completely international English pronunciation, with even the facial expressions and everything else changed, you should be careful. If you see investment information on your phone, or anything about investing in strange things like Bitcoin or whatever, remember, some of those AI-generated people are fake. They might be imitating a celebrity, a news anchor, or an investment expert, but the faces are all created by AI. The voices are also AI-generated, so AI really is everywhere. Everyone should still be careful, just a reminder for everyone. Actually, AI is pretty cool, fun, and quite unique. Speaking of AI, let's talk about TSMC. There's news about TSMC. Everyone knows the US government plans to revoke the end-user verification authorization for the Nanjing plant by year-end. This means that in the future, for all manufacturers, every shipment of TSMC's key equipment will have to be applied for and approved by the US on a case-by-case basis. Of course, Taiwan's Ministry of Economic Affairs has also come out to clarify, telling everyone not to worry. They said that TSMC's Nanjing plant in China only accounts for about 3% of its total revenue and production capacity, so it's not much. Even if it is affected, the impact will be minimal. It's not like Korea's Samsung or SK Hynix, where, for example, Samsung shipments. It's possible that 20% of Samsung's production capacity is in China, and for SK Hynix, it's as high as 40%, so the impact on them could be much greater. Also, the cancellation of this end-user authorization doesn't mean that all of TSMC's business in China will be completely banned. That's why our Ministry of Economic Affairs specifically came out to say that the impact of this should be quite limited. In my opinion, this requirement for TSMC to get US approval for each shipment really doesn't have much effect on TSMC's revenue or profits. It's only 3%, so the impact isn't significant. Fundamentals won't be greatly affected, and there shouldn't be major issues. But what's going on with TSMC's stock price right now? In the short term, the problem with TSMC's stock price isn't about fundamentals, it's a technical issue. On charts, it has already fallen below the 20-day and 50-day moving averages, which counts as a correction after run-up. It's gradually entering a correction phase. In the next day or two, it should climb back above the 50-day moving average. If it doesn't, period of volatility and consolidation could continue. It could drag on for quite a while, possibly throughout all of September. Yesterday, it dropped by 1.07%, and last Friday the decline was even bigger, all because of this negative news. Alright, let me remind everyone about the technical side. In the short term, since July 17th, mid-July, when it hit a record high of $248, this is TSMC's ADR. After reaching that $248 peak, have you noticed that from mid-July until now, which is over a month, almost a month and a half, have you noticed what happened after hitting that new high of $248? There have been a few recent attempts to go up, but it just hasn't managed to break a new high. The highs haven't gone higher, but the lows keep getting lower. So what does it mean when highs aren't breaking new ground and lows are getting lower? It means it's entering a consolidation phase. It means it's entering a consolidation period, but it's not necessarily turning bearish, not necessarily, because its fundamentals are still very good, extremely good. Globally, it holds a 70% market share in foundry services, all of that is TSMC. So TSMC's fundamentals are excellent and very stable. It's just that, technically, since highs aren't getting higher and lows keep breaking lower, plus it's fallen below the monthly and quarterly moving averages, this short-term consolidation period might last longer, the consolidation phase is extended. So when it comes to trading, everyone wants to pause and observe, but there's no need to be overly concerned about the fundamentals. As for this news, the Ministry of Economic Affairs has clarified, it only accounts for 3%. Even though the VU authorization was revoked, there's no need to worry. Looking ahead, I think its shipments, revenue, and EPS performance will be excellent. And with the continued development of AI, TSMC doesn't really have any major issues. Alright, to wrap things up, let's talk about something a bit lighter, which is also somewhat related to Buffett, that is, Kraft Heinz. So, Kraft Heinz, Buffett, if I remember correctly, among Buffett's top 10 holdings, there's a company called Kraft Heinz. Kraft Heinz, these two companies are Kraft Foods and Heinz. Back in 2015, these two companies merged, largely thanks to Buffett's push, bringing them together. So, two major food giants joined forces, and it's been about 10 years since then. But today, news came out that Kraft Heinz has decided to do what? They're planning to split up again, to separate back into two independent publicly listed companies. One of them will focus on things like one of them will focus on condiments, and the other will be about what kind of food? Ready-to-eat foods. They're splitting those up again. Of course, Buffett is a bit disappointed, but there's nothing he can do. He owns about 27.5% of Kraft Heinz, making him the largest shareholder. But honestly, if the company wants to make this kind of decision, even if he's the biggest shareholder, unless he owns more than 50%, it's actually hard for him to control or make the final call. So from the original merger in 2015, now they're splitting up again. As for Kraft Heinz, this company, if you have a bit of an impression, let me mention a few snack or biscuit brands and you'll know, like Swiss, or those cheese crackers, Swiss brands or more. What's their history? And what else? Ketchup. There's one called Heinz Ketchup. When we go to steakhouses, there's always ketchup, right? Ketchup is also a main product of this company. It's the 5th largest food company globally. Another company under them? Milka Chocolate, once famous, is also under this company. Everyone knows Oreo, right? Those delicious chocolate cookies. Oreo is also part of this company. Basically, there are several well-known food brands that are all products under this company. Okay, so regarding this, anyway, Buffett's investment report mentioned a $3.8 billion impairment on August 1st because the stock price kept dropping and dropping. So why is Buffett disappointed? Because Buffett believes that even though you merged them together, you still haven't seen significant synergies, even after 10 years of merging. Now you want to split them up again, breaking them into two companies. He feels that this isn't the best way to solve the revenue problem either. But regardless, they've decided to go ahead with the split. By the end of this year, they'll finalize the decision, and in the second half of next year, in 2026, the company will split into two independent companies. As for the stock price, just pay a little attention. It dropped 7%, with a sharp decline yesterday. The overall trend is still pretty bearish. It's been on a downward trend for quite a while. While the US stock market is hitting new highs, Carrefour has been consistently falling. Even though they have Oreo, even though they have Swiss biscuits and chocolate, the stock is still going down. So, their revenue and profits just haven't been able to achieve any significant breakthrough or growth. So, if you hold shares in this company, you should be a bit cautious going forward. Since it dropped 7%, it could break through its previous low, so that's something to watch out for with Kraft. This is relevant because this company is among Buffett's top 10 holdings, and he's already recorded an impairment loss on this investment. Lastly, looking at the US dollar, the company that's up in pre-market trading is, of course, Google. Google is up 6%. Apple also rose with the tide, climbing 3.3% in pre-market trading to $237. Tesla saw a slight increase of 1.6%, reaching $334. Kraft Heinz, after a sharp 7% drop, rebounded today with a 1.38% gain, bringing it to around $26. On the losing side, Philips, Apache Corporation, and Occidental Petroleum fell by 1.37%. Other oil companies like ConocoPhillips and Halliburton also saw declines. Devon Energy also dropped about 1% in pre-market trading. Overall, after yesterday's sharp intraday drop in the U.S. stock market, there was a strong rebound toward the close. It's clear that both the U.S. and Taiwan stock markets seem to have an invisible hand propping up the market. Looking at today's U.S. futures market, it's still showing a pattern of small ups and downs. Overall, it's more like a bullish market taking a breather after a strong rally. There's a pullback, but it's not a crash, and it's not a bear market either. So there's no need to worry. Just be a bit more mindful about managing your stock positions. The Dow Jones Index is still holding strong, staying above both the 20-day and 50-day moving averages. Among the four major indices, the Dow is performing relatively steadily, moving higher along the monthly moving average. The Philadelphia Semiconductor Index dropped 1.12% yesterday. Be cautious, it has already fallen below the 50-day moving average. Since it's broken below the 50-day line, it might continue to correct downward, possibly heading toward the area it previously broke out from this trend line. There's a dashed line from last August to now, which marks a neckline extending from last August to the present. This neckline area could be at risk of being broken. Given the situation with the quarterly moving average, it might correct downward to this area before it can find support and stop falling. At that point, we'll need to watch TSMC, as well as companies like Broadcom, Nvidia, Intel, and others. If their stock prices continue to pull back after strong gains, then the Philadelphia Semiconductor Index could really move closer to that neckline area. So, be a bit cautious. As for the Magnificent 7 Index, it dropped 1.08% yesterday. It also fell below the 20-day moving average, but at least it's still holding above the 50-day moving average. Overall, the performance of the Magnificent 7, as well as the Dow Jones Index, remains relatively stable and steady. Of course, I still want to remind everyone that September tends to be more volatile. The market in September may bring some unexpected news or policy changes, with more variables than usual. Whether it's this week's non-farm payrolls, next week's CPI and PPI, or the Federal Reserve's interest rate decision in mid-September, all of these are major reasons why the market is expected to be highly volatile in September. So, everyone should be especially careful with position management, okay? That's all for today's market sentiment update before the US stock market opens, bringing you the first-hand information. When class is over, remember to like, subscribe, and share for us. Finally, I wish you all successful trading, and we'll see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.